Hello and welcome to the Forex Form Guide, where we take a look at the major currency pairs each week through the lens of WD Gann analysis. I'm Aussie Dollarman. Great to have you here. Apologies that I was out of action last week. I did have influenza A. Thank you for all the support and messages that I got. I really appreciated those. It's gone through the whole family one at a time, but we're all back on our feet now, all safe and sound. So again, thank you. Let's get back into things. If you're new to the channel, welcome. It's great to have you here. I've got some videos at the top of the list there that you might like to check out. And if you do find some value in this or any of my videos, I'd really appreciate it if you could just click on the like, subscribe, and comment buttons. It does help me to push this channel out to more people and spread Gann's word and teachings to other people as well, particularly to those who might need it, especially as times are getting more and more challenging. In this episode, we're going to take a look at the Aussie dollar, US dollar, followed by the pound, the euro, and the yen. Before we do that, though, a quick disclaimer. This video is for educational and informational purposes only. It's not financial advice. Do your own research and trade responsibly. So let's kick it off with the Australian dollar, US dollar. In the last main episode of the Forex Form Guide, we were up here. This was Friday, the 11th of July. And I said, I don't think that these are two final double tops and that we're going to run down from here. I said, it just doesn't look like double tops, just like this didn't look like final double tops or these tops back here, etc. And these tops down here as well. We've seen a lot of potential false double tops this year, and I didn't think they were going to hold. Now, that was Friday the 11th, and the episode came out on Sunday the 13th when I said that. And then Monday, Tuesday, Wednesday, Thursday, we're dropping like a stone through here. And I thought, oh, maybe I got that one wrong. However, we did find support down there, and that 17 July low, I had been watching the 18th, which was a Friday, and the 19th, which was a Saturday, which you'd be looking a day or two either side of that. If it's on a Saturday, you'd watch Thursday, Friday, or you'd watch Monday or Tuesday. But I was watching that area for a law of vibration low on the Australian dollar, and we did get a low. It wasn't a particularly strong looking one on the Friday, but we did get a low coming in there, and then the market basically spent last week running up except for Friday when we had this little bit of a pullback here. Now, in terms of these cycles, I'm fairly new to them. I know traders out there who have been using them for years and years and years. I only got law of vibration working on the Australian dollar last year, but already, I mean, it's paid some great dividends. The 9th of April low down here, that was a great trade. We had the 7 May top over there. We had some of the earlier lows this year as well, and now we've got this nice 17 July low as well. In the Forex Form Guide from the 22nd of June, these are the dates that I gave out. The 26th of June high, 19 July low, and September 3 high. But if we look at the Australian dollar, there's the 17th of July. It was actually the 2nd of July where the top has come in there. Now, that's 6 days out. That's a little bit loose. I'm the one who has made the mistake there. I won't go into all of that, but that date was wrong. I did recognize it as it came about. The problem with that, though, is that's the 2nd of July high running down to the 17 July low. That's correct. And those of you who have studied cycles, you'll know we do see that from time to time, but we had a slightly higher top coming in here on the 11th of July. Now, what a cycle does is it tells you you've got a high down to a low. So you've got basically downward pressure through there. That doesn't mean the market can't run up and take out that high. And that's where Gann did a lot of work on form reading and swing trading and being able to trade the market with safety and trade the market with tight stop losses in place, knowing that he could and would get stopped out at times. These sorts of moves where you're correct on the cycle, but I was slightly off on the top there, but I knew that we were looking for downward pressure through there and a good strong run up here. These sorts of moves where you just get flicked out like that. If you're an options trader, that's okay. It doesn't affect you. I'm not an options trader though. So, those sort of moves, you do get stopped out either for a break even or for 1 unit of risk loss. And they're just part and parcel of trading, but they're also a good reminder to us that we never, ever, ever, ever just take a trade without a stop loss or risk too much just because we know, in inverted commas, for sure that the market is running down. So anyway, we had the low drop in on the 17th of July there. At the time, I was wondering, 1, 2, 3, 4 days down there, normally you would see that market run up into a lower top and then at least give you a higher bottom there before taking off to the upside. We didn't do that. We just rocketed out of there 1, 2, 3, 4, 5 days straight up. And then this is where we're sitting now in this market. So let's break that down quickly. Here's the move. There's the second top, little double tops that I didn't think were going to be double tops. So we ran down there. Have a look at the market here. That's that top, the 11th of July. You've got to run down there. Keep count with me if you can. You could put one index finger up on one of your hands if you like. That's one section down there. Then we've had a pullback, and then we've had a second section down to here. That's 2. You can put a second finger up now, and then the market runs up there. And you've got a third push down there, 3. So you've got 1, 2, 3. So you've got 3 fingers up now. That's as easy as Gann can be sometimes. Gann said to watch markets, they generally unfold in 3 sections, sometimes 4 sections, and very short moves can happen in 2 sections, but 3 is the most common. You've got 1, 2, 3 down there. This was actually a 62.5% retracement of that run up there. So you're sitting on a 62.5% retracement. It's not the best looking trade, I'll tell you, right from the word go. And a number of you have commented on that to me during the week. It's not the best looking trade, but it's sitting on a 62.5% retracement. And you've got 3 sections running down there. And then see here, you've got that little higher bottom on the 4-hour chart there. You've got to run up. And then this outside bar, it ran down first, gives you the higher bottom, and then runs up from there. So if you miss the bottom down here, you've got a 4-hour higher bottom there. That's a second potential opportunity. Or you've got that larger higher bottom up here sitting on a nice 50% retracement there coming out of the low there. So the market did give you 3 opportunities to get long. I am long this market out of the low. I'm happy with the trade. It sold off a little bit more than I thought on Friday. This run down here, which we'll look at in a moment, that is all one 4-hour swing down. So I would expect if and when we do have a little bit of a run up here, there'll be at least another thrust down there. But I do think that we are going higher. And you can see there on the daily chart, 1, 2, 3, 4, 5 days up. Not a surprise that at some point you were going to see the market pull back there. So to me, more upside on the Australian dollar. Let's have a look at the bigger picture charts. We're now comfortably, if we look at 2 different ranges resistance cards, we sat on 75. We're now above having tested that 62.5% on the monthly retracement there. So the next one would be that key 50% milestone there. As you know, as I showed earlier, the 3rd of September date is where I'm expecting a big fall on this market. If we just come underneath and kiss that 50% milestone around that, right at the end of August, early September, that's often called the kiss of death, right under that 50%. And then I'm expecting a strong move out of that September top. So that'll be a place that I'll be looking to get short. That's 67.56. However, in order to get there, we would have to retrace further than 75% of this run down here. And we're already very, very close there. So around that 66.85, if we push through there, this market may be going higher. And I do have one extra price in place. I don't think we'll get there by September, but there is one extra price in play that I think is worth watching. First things first, though, we have to see what the market does next week. But I do think it will be an up week next week. I think we'll get a higher bottom either on Monday or Tuesday, and then we'll see the market run up till the end of the week. And from there, we can start judging price levels a little better. Before I move on to my final slide, I do just want to point one thing out there. Here's the 17th of July low, and I'm expecting the next law of vibration top right at the end of August or at the beginning of September. I've said the 3rd of September, so I'll stick with that. But with these things, I'll be form reading the market around this. So it comes a couple of days early. I'm not going to be sitting there scratching myself. I'm going to be right on top of my charts there and waiting for that signal. However, that doesn't mean that we're going to run straight up and have a big clear high on the 3rd of September. That's one way that it can unfold. Maybe we run up to here, maybe we run up to the 75% milestone and we stop there. Maybe we run a lot higher up and we have a big high on the 3rd of September. But another thing that can happen is your top can come in. Let's say the top comes in at the beginning of August as an example, and then it runs down and gives you an overbalance to the downside, and then it runs up into a lower top. And that lower top could come in on the 3rd of September. So the 3rd of September could come in as a lower top. With this law of vibration stuff, that particular move, that month of September is showing up as a high probability for a strong down move. So whether it comes out of an extreme top or whether it's coming out of a lower top, I'll be looking for a shorting opportunity in early September there. So we're going to track that over the next few weeks. If you haven't subscribed to the channel, make sure that you do so, because I'll be talking a lot about this setup over the next 4 to 5 weeks or so as we anticipate it. It's all good fun. It's all interesting. It's fascinating to me. I love studying this stuff. And this is the first move of its kind that I've been looking for in this particular way. So I'll be learning along with some of you as well. Final thing that I'll say before we move off the Australian dollar, let's say that we really get a run on and we burst through these tops and we keep going. The next price area that I see a very strong price cluster. If you're a safety in the market student, you'll know what price clusters are and you might like to try and recreate this for yourself. But I see around 72.6 US cents. Now that's a long way up. I don't think we would get there for early September. Okay, but if we follow the pitch of that April move up there, you never know, we might. But I don't think we're going to get there. I wonder what would have to happen. I don't know. I can only shudder to imagine for the Aussie to shoot up like that in just a few weeks. But that's a really strong area if the market gets up there. And I'll say if we're up there on the 3rd of September, look out, because it'll be a long way up and then it'll come crashing down from there. But in the meantime, I'm not sold on us getting there. I'm sold on the date. I'm looking at the time, that end of August, early September. I think I made that pretty clear. Let's move on to the pound now. And looking at the pound, we've got an expanding range up here on the monthly chart. All is looking well there. I think that there is more upside due on the pound. Just a question now of how it's going to go about doing that. We do have a little outside reversal bar here on our monthly chart as we come towards the end of July. We've just taken out the top of last month and the bottom of last month as well. I still think the pound has a little bit more upside, but if you drop down to the weekly chart here, we're setting up for a potential little lower top on the weekly chart there. Now, if we break these weekly lows here in this week ahead, well, obviously we'll be starting to run down there, and I think we would pull up around either the 50% or the 62.5% milestone. Again, if you're a safety in the market, that should be bread and butter to work out. Those two levels are important. You can look for price clusters around there if we go down. I'm not saying that it will or it must go down, but if we break these lows and we start heading down, I'd say one of those two levels. And I would be watching that. I really, these days, I don't have as much time as I used to. I have other things on, but I mainly trade the Australian dollar, and that's fine. I like the Australian dollar. It doesn't always like me, but I do like the Australian dollar. But if I were to see that 50 or 62.5% retracement hit, I'd do one or two things. I'd look for a second, third, and maybe fourth price cluster to tighten that up, but I'd be looking to trade long out of that. I reckon that'd be a good area to watch. We've spoken about that previously. I won't dwell on it too much, but it would be a higher bottom on the monthly swing chart. And look at that last swing, about 1,900 points. That's where if you can get a really tight entry on the monthly chart, let's say you can get in with 10, 20 points of risk, you get 1,800 points. That's 90 to 1, maybe more, by trading out of a monthly low there. And then you can add to it as you go, and you really only need one or two of those in a year, and you've done very, very well, even with a small to medium account size. Will it go down this week? It'll be interesting to see. The daily chart is certainly pointing in that direction, but just keep in mind, like the Aussie has been, well, this has been pretty sideways for the last 2.5 months or so, really 3.5 months, going back to that April period over there as well. So if you are looking to take a trade on that, remember, it's not going to be as easy to take a high reward to risk ratio trade. So make sure that you take a smart trade, and the S in smart trade stands for a small risk entry, so that you can get that high reward to risk ratio on the trade. A quick reminder and a free plug. Again, if you're not aware, I did all my swing trading, form reading, and price forecasting work to date through a company called Safety in the Market. I used to be a student there. I used to be a teacher there for a time as well. Great time, great company. If you're interested in learning to trade, I don't teach it, but I used to. And the Active Trader Program online training there you can find, that'll answer all your Gann swing trading, form reading, price forecasting questions, and that'll get you set up with a really good plan for taking small risk entries on trades. I don't get paid anything for saying that, other than the small satisfaction of potentially helping someone who's looking for a bit of help with this stuff. Moving on to the euro US dollar now, and the euro is approaching that 119 level that we've been talking about, potentially setting up for a little weekly lower top there, but I wouldn't be surprised to see this go higher this week, especially as you look at the daily chart as well. Maybe like the Australian dollar, another day, maybe 2 days down, and then more upside on this market here. Having been out of action for the last week or so, I haven't done a full deep dive into anything but the Australian dollar, so I don't have much more to add to this. This is a market that I've been keeping an eye on and off for the last little while, but I'm not in it. I'm not particularly looking to trade it. I'm looking to maximize my Aussie dollar work at the moment in anticipation of a couple of big moves coming up, firstly in August, obviously, and then the big one in September. But as always, in a market like this, I would be paying attention to my swing charts and looking for that higher bottom to form on the euro here. We'll end by looking at the US dollar, Japanese yen. It's been a long 4 months. As you can see there, we're still in this little sideways period here. I still think these lows are going to be broken. It's just a question of when. Now we have officially had the monthly chart swing up. We've seen that in the last couple of weeks. There's the weekly chart there. We've broken the high of the previous month there. So that's turned our monthly chart up. Now, if you're looking for a short trade, you don't necessarily have to wait for it to break these three lows here. You can look for it to break the bar chart low here. Potentially, we start a new month this week coming up, and that will give us a new bar here. And if we break that low there, well, that turns your monthly swing chart down into a lower top there, and potentially a run down there on the US dollar, Japanese yen. One thing that I'll point out there as well, this little rundown here on the monthly chart there, we're not quite there, but we're approaching a 50% retracement on the weekly chart there. That's 15 weeks down. You can count them. You can take my word for it. You can count them yourself. But I'd encourage you to do the counting. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks down. We've now had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks up. And we've had our 13th week there. So if we have an up week this week, that's going to be 15 weeks down, 14 weeks up. So if we get into the following week and we're sitting right on that 50% milestone, do you realize we'll be balanced in both price on a 50% retracement and also time? Be 15 weeks down, 15 weeks up. That can be a good area to watch for turning points as well. I got a feeling this will go a little bit above 50% here, but you can see it's been a weak retracement up here. So to me, nothing has changed from when I first identified this several months ago. It's just been an ordinary period for trading through here. And that's part and parcel of trading and form reading, and particularly with Gann trading as well. You see in Gann's courses, it's a common theme that he will say, you're not going to be trading all of the time. You're looking for the right time to trade, and that comes through Gann cycles from tunnel through the air. But you're also looking for the right price setups to trade as well. One of those are your big picture double tops and bottoms, but another one is just simply your monthly swing chart turning points like this. And if you can identify a nice turning point around a monthly swing top there, you know you've got a potentially large run coming out of there. So you can zoom in, you look at your daily chart, your 4-hour chart, your hourly chart, 15-minute chart, whatever you want to go down to. You get a nice tight entry, and that's a monthly top. And then you take a step back and you let it unfold and let the market do whatever it's going to do. But that's how you get those big reward to risk ratios on trades. Another way that you can make a lot of money in a short period of time in a market is by day trading, getting in there, just going bang, 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 20 hours a day, just smashing out trades there. Problem is, if you look at the general population, not everyone is suited to trading. Okay, so firstly, it's a narrower window of people who are suitable to trading because of personality, psychology, time commitments, overall commitment to trading, all these sorts of things. That's the first thing. But the second thing there is within that group of traders, only a very small amount of those traders are going to be suited to day trading. So are you one of those people? Well, that's a risk that you would have to take. So Gann didn't recommend, and my first and probably my biggest mentor, David Bowden, who was the founder of Safety in the Market, he used to say, if you're in front of the market all the time, at some point you're going to lose all of your capital. The emotion just builds up, builds up, builds up. But at certain times, and David thought there were 3 to 4 times each year where this would happen, but at certain times the market will come together for a potentially really good turning point. Then you can zoom in to your intraday charts. You can get a really tight entry, nice big position. Remember the disclaimer at the start, this is not trading advice. But the theory of that, as David would say, is get in with a small entry. And then when the market starts moving in your favor, maybe add once or twice to your position and then back off and leave it alone and let that monthly swing unfold. And the beauty of trading a monthly swing like that, if you can get a tight entry, obviously there's the high reward to risk ratio, but it does wonders for your psychology as well, because that monthly swing is going to take 2, 3, 4, 5, 6 months to unfold. During that time, you're in a trade. It's showing a profit. It's telling you you're right. Every day you look at the market, I'm right, I'm making money. I'm right, I'm making money. I'm right, and I'm making money. And it just does wonders for your trading account balance. It does wonders for your psychology as well. Very underrated. People like to get in there and take lots of trades because we think, I'm a trader, I've done all this work, I want to be a trader, I want to make money now. But sometimes you just have to have that discipline to sit back, wait for that big setup, and then once you're in it, just let it go, let it do its thing. Don't choke the trade and get yourself kicked out of the market. Let the trade unfold, let the market tell its story, and let it all unfold and just enjoy the ride. I mentioned earlier the time cycles and things like the law of vibration. All of that comes from Gann's novel, The Tunnel Through the Air. You can see that there. If you want to get started, I have put together an audiobook of Tunnel Through the Air. You'll find that in a playlist on the channel, so you can listen to that over time. It's about 12 hours. It was 687 minutes when I measured it all out, which was a good number. 687 minutes, just under 12 hours, about 11 and a half hours. You can listen to it on 1.5 speed or 2 speed. But take your time with it and just absorb it and listen for the repeats, listen for the repetition, listen for the things where Gann seems to be laboring a point. Because if he's laboring a point, he's trying to clue you in on something. He's trying to push your prod you in a certain direction to teach you something. That's all for this video. Again, you can find some other videos if you're new to the channel that will help you get up to speed with some of this stuff quickly. And of course, if you did find some value in the video, I'd really appreciate it if you can click on the like button and leave me a comment. You can ask a question, you can just say hello, whatever you want to do. But I'd really appreciate a like and a comment. And if you want to follow this journey into this potentially large September turning point, make sure that you subscribe to the channel as well so that you can stay up to date with my latest videos. I've got a few more coming out as well as I start to get things under control a little bit more. I've got one on smart trading coming up. I've spoken about that a lot. I'll have one coming out on that in the not too distant future, plus one or two others along the way as well. All right, that's all for this week's episode of the Forex Form Guide. I hope you enjoyed it. Until next week, I wish you all the best with your trading. Have a fantastic week, and bye for now.